Hello again, traders, and welcome out. This is Ankit from Maverick Currencies here, and this is our currency room for the upcoming week of September 18th to 23rd. Let's do a quick recap of this week. It's just been definitely a very busy week, a lot of twists and turns to the market. So let's take a bit of a wrap up of this week and then take that information and talk about this upcoming week, as we are likely to see a lot more of volatility ahead. So starting with the equity markets, this week was a pretty nasty week. Equities plunged over. Sell-off that was triggered by that surprise uptick in the US CPI print. So we definitely saw that the markets were front running that CPI report, and everybody was expecting the report to actually be weaker. They're actually expecting for the CPI to give a negative print for the first time since 2020. That did not happen, and markets were caught off guard, and we saw a big, massive move to the downside. So overall, that was a story that happened on a Tuesday. The market remained weak for the most part. Now, the US dollar also got a nice lift off of that report. So we have the US dollar being a strong currency, and we also have the Japanese yen also is one of the strongest currencies this week. Something that we did cover in our Bank of Japan update. The Bank of Japan conducted a rate check. That's mostly in preparation for a currency intervention. So when that news hit the markets again, that's when the yen really made a turn. And since then, the yen actually has stayed strong. So this is where I think the speculations is running strong that there might be a currency intervention. Next week we have the Bank of Japan statement. So I think for now, the yen is going to be the focus going to next week. Now, looking at the cryptos, down all week as well. So again, plunging lower. Not a surprise. That's just what we have seen so far this year. We see these rallies and they just give up and they just start to go lower. So powerful moves both ways, both on the upside and the downside, but the trajectory has been a lot more on the downside. Now, taking a look at this last week's reports, again, this was a busy week, but we did get that report on Tuesday. But after that, everything was just one way. We didn't see any sort of big substantial rallies after that. So this is again a pretty standard down week, and with very little up move in between. So let's do a quick recap of this last week's reviews, take a look at some percentage moves, and see what was really the big mover. And as you can see, the S&P was down 5%. Again, that's a big down move for the week, starting with the cryptos, and again, down 12%. So these are, again, back to those normal big down weeks. And the pain is seen across the board. Doesn't matter if you're trading oil markets, gold, everything is down. So that's what we've seen in the broader markets. And now let's break it into the currency market and the crypto market and see where the big movement was. And again, this is a pretty standard move across the board. And I must say that this was a week where of a surprise with the Canadian dollar weakness. Remember, the Canadian dollar has been mostly tied up with the US dollar, and that's where we actually do not see a big of a divergence there, and most of the movement has been in the Aussie and Kiwi. But this time around, you can see that the dollar and the CAD did diverge, and there was a big move. CAD was down 1%, and the dollar is up 1.36%. So as you can see, there was a nice little catch up in this dollar CAD trade. But outside of that, the Aussie and the Kiwi, they all remained weak for the week, and the money actually is staying across between these four currencies. And surprisingly, again, we usually see the dollar being up and the yen being down. Remember, there's no negative correlation this time, though both the dollar and the yen stay strong. And again, something that we could expect as we go into next week with some important rate statements. Euro and Swiss franc, again, Swiss franc has been really rising. And again, we have the Swiss Bank National Bank's rate statement next week where they're expecting to hike rates. So this could be, again, catching up on that bit there, but the Swiss franc has been relatively strong. But here we are. Euro is turning things around too. And remember, this is an off week where the negative divergences didn't play out. Usually we have seen the dollar and the yen have a negative divergence. We have the Swiss franc and euro having a negative divergence. But this week, there was no negative divergence. So something we had to pay attention and see if that divergence is over for now, or is that about to flip? So that's something we have to wait and see till next week. Now, taking a look at the currency, the crypto markets, we can see that paying across the board. Leader was Ethereum, down 19%. Again, big, massive move in Ethereum, which has been a relatively outperformer, and as you can see now, it's turning into a relatively underperformer. Outside of that, paying across the board, there's no better way to paint this picture. Again, just very negative sentiment across the board. So let's do a quick market analysis and then take a look at some charts and see where we are and what's our outlook into next week. And so far, you can see the S&P is down below the 20 to 50. Again, massive rally that happened after this big sell-off late August, early September. As you can see, that's turned around. Now we are now broken that key support, which is now the resistance. So at this point, markets are likely to go test this support level down the June lows that we had. There's still quite a room for this to drop, and I think in between we could see some bear rallies to short into. But I think right now, last week was a pretty strong week, and then here we are with a pretty down week. So expect markets to have these kind of volatility, these big twists and turns. And as a trader, you just have to make sure that you're on the right side of the markets. If in the short term, if it's not matching up that momentum, then that's where it's better to be on the sidelines. But as we have seen a big drop here, I wouldn't be surprised to see a bit of a rally. Maybe try to test this support, which is now the resistance level here. If we try to get above this, I think we could get back in this little range here. But as long as it stays below this, I think we could continue to move lower. Now looking at the other charts over here, looking at the world markets, you can see that the world markets, it's actually back, getting very closer to the June lows here. So the trajectory is pretty much similar with the equity markets. And again, this is where if we break June lows, I think the sell-off in the markets can intensify. But we have a little bit of room for this to kind of test that out before we hit that level. Now, the crypto market, same thing. We have been sideways, with some powerful rallies in between, and we have a very important massive support sitting at this level. So if you break this level, I think there could be a lot more further downside here in this range. So still a bit of a room to get to the June and July lows that we have seen in the markets. So overall, you can see this is no way markets to trade. Trying to catch this counter trades here. I think market's pretty clear. The momentum is to the downside, so it's important to stay with that momentum. That being said, markets are twisting and turning pretty sharply on any sort of news event or any sort of given day. So I think next week we have to really pay attention to the FOMC rate decision. Again, the big moves already happened, but then again, if you look at next week, it's a pretty packed week with 4 central banks. We have the U.S., we have Bank of Japan, Swiss Bank, and we have the Bank of England. So this is again will be the big one next week, or the FOMC rate decision. Again, they're expected to raise rates by 75 basis points, but again, that's mostly priced in at this point. What's really going to be the focus is the press conference. And when that press conference comes out and the Chair Powell starts to speak, and any sort of comments will really drive the dollar higher or lower. But at this point, it seems like the Fed is pretty determined to kind of stay on course, especially with this CPI print. If we had seen a weaker CPI print, this would have been a whole different markets. We could have rallied, the dollar could have collapsed. But now that is just keeping the narrative alive, which is the Fed has to be more aggressive, which again will be putting pressure on the markets and helping the dollar to go higher. But as we go into the other central banks, again, we are expecting another rate hike from the S&P, which is 75 basis points. And I think that's really priced in at this point. We'll have to take a look at charts, but that's the expectation for another 75 basis points. And we are already seeing some of the currencies kind of making a run, like the Swiss franc. The Bank of England, again, they're expected to raise rates, but then the pound has actually hit 90.85 lows against the U.S. dollar. So clearly, the markets don't care for the rate hike coming from Bank of England. So pretty going to be busy week, and also just kind of missed it out here, the Canadian CPI print month over month. So just like what we saw in the U.S., these CPI prints are important. Now, the CPI, the Canadian dollar actually has been heading lower this week. Something to pay attention to next week if this CPI turned out to be hotter or weaker. So, I mean, very similar kind of outlook what we saw with the US. I mean, they're expecting for a negative print. So again, if this comes out to be a positive print, I wouldn't be surprised that the Canadian dollar actually kind of rise up on that news as well. So as a trader, we are ready to respond to whatever price action takes place, but we just have to understand the risk that there is potential movement likely to happen, and we just have to make sure we are in the right place at the right time. So this week's events, again, market sentiment likely to remain bearish ahead of the FOMC rate decision, and we could see maybe things turn around after the FOMC. So this could be a two-part week where we could see some weakness early on and maybe some relief rally later on once those news events are out of the way. But again, that's just a speculation. We could just stay weak. So if we get these rallies, just understand that markets could have this bear rallies in between, but the overall the trajectory is still on the downtrend. Now, central banks is where what's really moving the markets. And again, this is all relative to the market environment that you're in. We are not really seeing big movements off these economic events, but we are seeing big movements coming off from the central banks and the CPI, the inflation, which is really the big focus here. So that's what really we'll be focusing on this week. And this will be a busy week starting from Tuesday all the way till Thursday and Friday. Even Friday, we have this Euro manufacturing and services PMI figures. So the Euro is catching a nice lift, but let's see how the numbers are. And based on that, we can actually adjust our outlook with the Euro. But so far, Euro actually looks much better than it was just a few weeks ago. So let's do a quick market analysis and then take a look at how things are looking as far as the chart goes. And let's just start with the Bitcoin. So you can see that the Bitcoin trend score stays at -2 and the velocity is at -3. Again, I think overall this thing is heading lower, which we have been calling the markets right on the cryptos here. All these little rallies are just selling off, and pretty much the same thing across the board. Bitcoin Cash seems to be a little better one, but then we have Ethereum breaking lower, and then we have the Litecoin also breaking lower. So at this point, not really looking to buy cryptos. I think there's better opportunities elsewhere, especially in the currency markets. So now let's just start with the US dollar. So you can see the US dollar has now run up to the previous high, which is now the resistance. The trend stays +2, and then the velocity, again, massive move that happened on a Tuesday after the CPI print, and you can see that we have pretty much consolidated since then. So I think we still want to stay on the long side of the dollar, and we'll see what happens on Tuesday after the FOMC rate decision and the press conference. But so far, stick with the volatility, stick with where the trend is, and I think all little pullbacks could be just buying opportunity in the US dollar. So while the US dollar stays strong, I think what we need to focus on is what other currencies are also taking the lead here. So you can see that the Japanese yen, as I mentioned earlier, they did talk about this currency intervention, but you can see after that the Swiss franc has stayed strong, and this is slowly climbing up, still below the 20 to 50. So the trend score still is weak, but the velocity is strong. I think this could be setting up nicely for next week, so we'll have to kind of wait and see where the yen goes, because again, velocity, everything, the trend is still pretty weak. So we need to get above these moving averages to have it viable buying opportunity in the yen. And I know this has been, again, the best shorts we had so far this year, but like traders, we always have to kind of keep an eye out on the what the next possible move is. With the Bank of Japan next week, we'll see. I mean, this could just be, maybe this just could be a bear rally and turn lower if the Bank of Japan stays on course. But if the Bank of Japan can change some of its rhetoric, or maybe comes out and talk about intervention, I think the yen has a lot more room to rise. So at this point, this is a mixed score, but we'll have a better clarity next week. Now, the Swiss franc, you can see massive movement that we've seen just in the past few days. So I think this thing is already running with this Swiss bank rate hike. I personally think this looks a little bit extended here, and if we take a look at the momentum, it's slowly weakening. So I'll be a little bit more cautious on the upside here. I think I won't be only looking to buy this if it breaks out, but I think at this point it needs to pull back a little bit or consolidate ahead of that rate event. So that's something we'll have to really pay attention to. But again, another mixed score, just like the yen, we have a +2, but a -1 over here. Now, looking at the euro, I mean, euro is looking a lot better. I mean, this thing, you can see that the moving averages are crossing over and the velocity is there as well. So I actually do like euro crosses across the board. So we'll pay attention to some of the euro pairs as when we take a look at the pairing. And now looking at the pound, I mean, there's no better way to look at this. I mean, this thing is looking very weak. And now compare that to the euro, the pound. I mean, it stays below the downtrends, below the moving averages. The velocity is weak, so I think this is pretty clear to me. Any little bounces in the pound could be just a selling opportunity. And again, if you're looking to buy something, there's no reason to buy a pound. There's other currencies that are looking a lot more promising here. Now, looking at the CAD, I mean, this thing is now testing that 52 moving average, and if we just go back in time, we really haven't seen this thing break down as much. We have seen some pullbacks, but those pullbacks have been just a buying opportunity. But this is where price action looks pretty weak. We'll have to see the CPI report next week. I think if the CPI gets it's actually stronger, we can see this kind of rise up again. But if the CPI is actually weak, then we can actually see this fall further. So I think it's back at the decision point. The trend score is at a 0. But we can actually move that to a -1 if it continues to break lower. So that will be a Tuesday trade off the CPI print. Now the Aussie and the Kiwi. I mean, Aussie has done or held in relatively well, during this market volatility. But this thing again, the trend score is a -1, and then the velocity is a bit of a 0. So this is why, we talk about it's important to pay attention to what's moving out there and just focus on that. And right now, it's clearly the Aussie has not really been in the best play here, but we have seen better currency moves in other places here. And now we have the Kiwi, which has been actually a better short, but now you can see in the shorter term, the velocity has kind of flattened out to be a bit of a +1 here. So this is why, as much as we want to pay attention to trend score, we also want to pay attention to velocity scores, because something could be trending but still have some moves that are off trend, and that's where velocity will be on the opposite side, and that's where we can decide either we stay out of the Kiwi or play out a bit of a reversal. But right now you can see that the move really hasn't been as substantial to play on. We did notice some positive data from New Zealand this week. I think that GDP was stronger. We have seen better numbers, so I think maybe Kiwi is showing a little bit more sign. But if we can get above this previous high here, I think we could see a bit of a more relief rally coming into the Kiwi here. It's a pretty down day today. The fact that Kiwi is not down is showing me a bit of a relative strength. So trend scores and velocity scores are pretty clear, but also pay attention to any sort of change in those trend scores. Remember, we are sitting at a -2 in the yen, and we're sitting at a +2 in the Swiss franc. But now, if you take a look at the velocity, it's the opposite. We have -1 on Swiss franc and +2 on the yen. So we could see some changes happen with the central bank events. I mean, right now, as you can see, the Swiss franc is on the bit of a downside here, and the yen on the upside. But the things that are holding steady in between is the euro and the dollar. And what's really turning is the CAD, which is at a -3. So if the CAD continues to weaken, we can move that trend score down to -1 as well. And again, that will be a better scoring for this. But outside of that, Aussie and Kiwi, they kind of stay mixed bag. Where I'm really paying attention to this week is the Swiss franc and paying attention to the yen and pretty much the currencies that have these central bank events. That's where I think the biggest moves likely to happen. One way or the other, we are traders. We are not married to an outlook. So if something changes, then I wouldn't really feel shy to make that change. I mean, yen, it's a no right now, but I think that could come in play next week. We have the pound, which stays bearish. I think continues to be bearish. And Swiss franc, which is a no right now, but I think this could be a bit of a play next week as well off the Swiss bank, the rate hike that they're coming up. So outside of that, mixed scores on Aussie and Kiwi, but like I said, this markets are changing very quickly. And as a trader, you have to change with the markets. The momentum is strong. This is where pay attention to velocity as well. And especially if your trades are shorter term, then pay close attention to velocity, because that's where you can get a nice little short-term trade and not be married to a longer-term outlook. But let's take a look at possible trades here, jump into trading view, look at some charts, and then talk about what's looking good over here as far as a charting goes. So let's just start with some of the yen crosses. I covered this in the Bank of Japan update here, but we're noticing a nice little turnaround happening in the yen. So we had breakouts, which is now falling, and we have the CAD yen, which is falling down. I mean, we have the prior resistance, which is now the support. But there's a lot of other yen crosses that are actually rolling over as well. So I think we have to really pay attention to some of these yen crosses. Like, like CAD yen looks nice to me here, especially if it breaks below that 107.18 level. Paying attention to dollar yen as well, because we're kind of consolidating over here. We can also pay attention to Swiss franc yen, which is now trying to pull back here as well. So yen crosses, again, looks good on the daily chart, but what I really like it to trade it on is a 4-hour chart, because in a 4-hour chart we can see those momentum shifts and changes that takes place that might be not happening on the daily, but 4-hour kind of start to move first. You can see how the CAD yen, for example, it did move lower, made a lower low with a lower high, making another lower low. So that's the kind of trend changing move that we look for when things are turning around. I mean, look at pound yen, going from 168 all the way down to now 163. Those things have turned around pretty nicely here. So let's just talk about some of the other pairs that I'm paying close attention to as far as the correlation goes. Look at Euro Swiss franc. So we had these two currencies that have been negatively correlated, and now we're just seeing a positive correlation. So the question is this about to turn? So, I mean, we had a false breakdown this week in Euro Swiss franc. You can see that little wick on that candle here, and we're still below the 20 and the 50. So this is important to pay attention to, especially if you're trying to decide between the Swiss franc and the euro. And I think at this point, I do like euro more on the upside than the Swiss franc. I mean, considering that the Euro Swiss franc is turning a little bit. It's still early to make that call because we are still below the 20, the 50. But as long as we get above this, I think we can easily flip that or change that outlook. And in that case, we can take a look at, pairs like Euro Aussie. You can see that momentum is slowly shifting higher. Our 4-hour chart is also trending higher as well. We can see the same thing with the Euro Kiwi. But right now, again, these two currencies might not be the best one because they're kind of mixed. But take a look at Euro Pound. Now, I mean, that's something now is moving. On a 4-hour chart, we're talking about a total change in that direction, and now we are seeing higher highs and higher lows. I think that's setting up very nicely here. We also have dollar CAD, which I said earlier, made a nice little turnaround this week, up nicely and making new highs. So if this trade is ready to turn around more, I think this has a lot more upside potential for this to keep running higher. I mean, right now we did pulling back a little bit, but like I said, next week, that CPI figures is really what I'm paying attention to make that trade off the CAD. And, we just paying attention to the relative strength weakness. I mean, look at the Kiwi CAD, this week. Let's take a look at the weekly chart. It's actually positive. So not really seeing that negative correlation. And look at a day like today. It's up like 0.8%. So nice little uptrend move over here. So the question is is the CAD falling out of favor, or is just a pullback to buy into? So that's something we can pay attention to next week. Again, if you're looking for reversals, like I said, I really like playing this the Swiss franc reversal. If this rate hike comes out and maybe the price action is already baked in, I would like to take a look and see if the Swiss franc has some sort of correction after that. I mean, look at a 4-hour chart here. We got a failed breakout over here. So now moving averages are turning low over here. So maybe the daily is not giving us a signal to turn yet, but look at how far it is from the moving averages. I think there's a decent risk for the Swiss franc to turn lower. So in that case, I mean, we can pair that against if the CAD turns out better after the CPI print. I mean, CAD Swiss franc. But outside of that, I mean, we can take a look at Kiwi Swiss franc. 4 hour chart, again, making a little reversal here. So again, it's all about the holding period that the trades you're looking for. If your holding period's a lot longer and you look in the daily chart, yeah, maybe there you won't get any signals. But as you go on a shorter term time frames, you can spot this twists and turns as far as this relative strength and weakness goes, because it keeps changing. And I think next week is the week where you're likely to be just watching those central banks events, because I think that could change things around. And as a trader, we're ready to respond, like I said, and move with the markets. So in conclusion, we'll be focusing on those central banks events. Again, the dollar, yen, Swiss franc, pound, and euro. I'm focusing in primarily on these 5 currencies this week. And as those events start to roll out and get out of the way, I think that would just set the tone for those currencies. So I'm really, I think that's where the biggest movements are likely to be. But as always, make sure you follow relative strength and weakness. And as far as the schedule goes, we have the schedule up and running here. We'll be adding more classes next week. But if you have any questions or any topics or suggestions you want to cover, let us know. Otherwise, I think we're pretty set on our game plan for next week. Make sure you go in with a plan next week, whichever way, whatever outlook that is. Make sure you're keeping up with that and making adjustments as you start to get more and more information. But I think next week likely to be another big week for trading. So keep up the good work and happy trading.